Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Brought to you by NYSHEX, helping you deliver through volatility.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how's it going?
It's going great. I'm at a nice early summer here in Denmark.
Oh, it sounds wonderful. I was moving this weekend, so I'm glad to be settled in the new place. All right, let's get started talking about freight rates.
Yeah, and let's start out here. This is the Pacific, and what we start out with this week is actually the 6 different subtrades. So origins being China, Taiwan, Southeast Asia, and Northeast Asia. And then the rates as they go into US West Coast and US East Coast, respectively. Of course, the US East Coast rates are the ones you see that are at a higher offset level compared to the US West Coast rates. Now, what we're looking at here are the spot rates basically over the past 12 months. And yes, rates are trending upwards, which is nice. At least if you're a carrier, not so nice if you're a shipper. But, and there is a but, sometimes we tend to also lose perspective when we only talk week-on-week changes, because it is absolutely true, as you can see here, rates have certainly been going up ever since basically the Hormuz crisis started. But there are certain nuances we can also see here. You see the slight bump back there in January? That was the pre-Chinese New Year peak. And if you think back to our podcasts back then, what we were talking about was how this peak was actually not very strong compared to what you usually see in Chinese New Year. We also talked about how the rate decline after the peak, it actually came down faster than usual. So the increase we are now seeing here, yes, timing-wise, it could appear that this was in relation to the Strait of Hormuz, but in reality, it is more a seasonal pickup, again happening early, just like we saw the Chinese New Year peak happening early. So I wouldn't ascribe these increases to have anything really to do with the Strait of Hormuz, but more to do with seasonality and supply-demand development specifically in the Pacific. And now you zoomed out a little bit here, Caroline, so now we can see several years. And I wanted to do this as well, because what we are seeing here is, of course, the massive spike we first saw in early 24 when the Red Sea crisis happened. Then we had the spike over summer 24, very much still in the throes of the Red Sea crisis. Then we come to 2025, where we also had first an early spike, largely driven by a strong demand situation as there was a lot of import in anticipation of tariffs. And then we had this extremely narrow but high spike when the US-China trade war rapidly paused, and then there was a short-term surge of cargo. The reason I want to show this is when we talk about Pacific rates having gone up now since the start of the Hormuz crisis, yes, they have. But as we can see here, the level of increase over the last 2 months is neglectable compared to the roller coaster rides of 24-25. So if we think back, what did we have of disruptors in 24 and 25? We had the Red Sea crisis. We had the threat of a strike on the US East Coast. We had the trade war. We had the change to all the new alliances. All of these different disturbances led to these massive changes in spot rates. Now we had the Hormuz crisis for 2 months. And what do we hear? Not crickets, but close to it, because the changes here definitely do not fit the pattern of previous crises that we have seen. So I want to highlight here, not necessarily that this is a guarantee we won't get any spikes going forward. That such a guarantee doesn't exist. But it does amply demonstrate that the Hormuz crisis is a massive regional crisis, but it does not have the global impact that we have otherwise seen from the previous crisis over the last couple of years.
Yeah, this perspective is definitely really important to keep in mind. I also wanted to quickly call out, so last week we talked a bit about the way that the Northeast Asia to US West Coast and to US East Coast fluctuates. The rates fluctuate compared to the overall average. So I wanted to just call that out, and because you asked me to remind you this week to talk about it.
Thanks for the reminder. No, you're absolutely right. And we did say last week that it is interesting how Northeast Asia fluctuates up and down. And we talked about how this is because there's a significant amount of the services from Far East going over to US West Coast that stops, especially in a place like Busan, where you can then change your allocation for transshipment cargo up or down, and that has an impact on localized supply and demand. And we could see it here. Last week we talked about how Northeast Asia rates had suddenly dropped. This week we could talk about how much they have increased compared to last week. But again, that would be a misleading conclusion just to say, hang on a second, Northeast Asia, US West Coast is up. What we see is this continuing, almost a sine wave around the baseline trend being set by Southeast Asia and China and Taiwan. This is what we see again. Maybe you should remind me next week again, and let's see if Northeast Asia then pops below the line again.
All right, will do. Let's switch gears a little bit and talk about Asia North Europe.
Yes, because here I want to do the same as we did for the subtrades on the Pacific. What we see here is Asia North Europe rates have actually been declining for the last 3 weeks. They did increase as we saw the Hormuz crisis come in, but that quickly reached an apex. They're now going down. They are still above the level we had prior to the Hormuz crisis, but not by much. And the level now compared to the pre-crisis is such that if you were to look at it from a cost perspective, the added cost from the higher bunker fuel prices are not being compensated for compared to where the level was. So yes, rates are going down, but I wanted to make the same argument here that we also saw in the Pacific. The changes we have seen over 2 months now in relation to the Hormuz is nothing compared to the changes we've seen in 24 and 25. Again, making the point that the Hormuz crisis really is a localized phenomenon, not a global phenomenon. Neither Trans-Pacific nor Asia-Europe freight rates are in any major way dominated by it. Of course, from the carrier side, that creates a problem because it does seem to imply that freight rates are mainly governed by supply and demand. And supply and demand on these trades are not impacted by Hormuz, but costs are. The increasing fuel cost is indeed global. So this seems to indicate that the carriers are struggling in covering the added global costs stemming from the Strait of Hormuz in the freight rates. And that, of course, is a challenge for the carriers going forward.
Yeah, that makes a lot of sense. Might be worth talking about what we're expecting to see with the futures rates.
So if we look at the futures rates here for Asia North Europe, there is actually an expectation that rates are poised to go up here over the peak season. And if we remember back to a week ago, it's actually elevated slightly for some of the months. Now we have June, July, and August all up at 2,900, which is at least a few $100s above where we are now. So the participants in the futures market at least do expect to see Asia North Europe rates go up here over the peak season, but not to a massively high one. This right now, from a futures perspective, leads to a peak season that is slightly below where we were in peak season last year. And of course, a far cry from where we were in 24. And we can look at the same thing for the Pacific. So here we are on the Asia-US West Coast, the main Trans-Pacific route. Again, the market is seen that right now spot rates have gotten slightly above where we have the coming May and June futures prices. But the market is also seen to be expected to continue to go up actually all the way to November, which is an interesting expectation, given that by then peak season should indeed be over. If we compare to last year, this is a difficult comparison because keep in mind last year Pacific rates were actually fairly anemic also during the peak season, with the only exception being this massive spike when there was a sudden pause in the 100% tariffs that led to a surge in cargo that only lasted a few weeks, whereupon the rates crashed again. So the futures market right now do expect a slow and steady strengthening of Pacific rates over the coming 6 months, and also at levels higher than what we saw last year.
Awesome. All right, thanks for running through that. Let's shift gears a little bit. So it's been a while since we've talked about tariffs, but we do have some news this week.
Yes, we do. I was about to say no news is good news in the world of tariffs. That's also because we haven't spent time on many podcasts talking about all the trials and tribulations people have in trying to get their IEEPA tariff refunds. That is not an easy process. But that one aside, the new one that appeared was that Mr. Trump clearly got agitated with EU's pace of implementing the trade deal from last year. So he is now implementing a raise from 15 to 25% on cars and trucks from EU into the US.
So it sounds like it's going back up to the original level that it was before it was negotiated down. But I'm curious to understand, what's the time lag between a policy like this being implemented and then the actual changes in freight demand?
I was about to say in the old days when changes in tariffs didn't happen all that frequently and when there was a long lead time, then an increase like this would usually lead to an element of front loading before implementation, as an example. But those rules have long since gone out the window. With all the changes we've seen over the last 6 months, there's not much sign that anyone is truly front loading when tariffs are poised to become higher, often because the implementation deadline now is so short that you can't do it. And even if there was a longer implementation deadline, most importers have resigned themselves to the fact that tariffs can change up or down at any day, anyhow, no matter what the agreement is today.
Right. And so this is live, correct? This isn't just
Yes.
talk at this point? Okay. So do you think a fair prediction would be that we might not see very meaningful shifts in supply chain? It might just, in fact, be a shuffling of margins and who's making money where?
Yes, I mean that has de facto been the case for more than half a year now, where most supply chains into the US, of course you can probably find exceptions, but most supply chains are basically a continuation of the setup we had before the trade war, with tactical modifications where that makes sense. But a total revamp for the long term of many supply chains for US importers is simply not on the table, because there is no confidence that any tariffs will stand up to the test of time.
Right. Well, if there was anyone that had their eye out on a new Beamer, you might want to do that sooner rather than later. All right, let's shift gears a little bit and talk about the Strait of Hormuz and the latest updates there.
Yeah, we have had quite a bit of news here this morning, or actually yesterday on Sunday. We had an announcement from the US that they would now be offering to escort vessels out. And as of this morning, here Monday morning, that seems to also be the case. There were details coming out of US Central Command in terms of how many forces and assets they were deploying to actually do this. So far, so good. What has then the consequences been so far? First of all, remember a month back when the ceasefire was announced? Within hours of announcing that ceasefire, you saw at least 40 vessels pull anchor and immediately start to steam out through the Strait of Hormuz. That was a month ago, only to be then turned back because conditions changed. With the announcement this morning, and apparently there is actually deployment of US assets to follow this up, there has been no such exodus of vessels. I checked again on Vessel Tracker just before we went on air here. There seems to be no massive surge of vessels suddenly wanting to go out. It's basically nothing. On top of that, there were reports coming out here over the night of 2 attacks and also 1 incident. There were 2 attacks that were happening in the Strait of Hormuz, one being a UAE-based tanker that was actually impacted by either a drone or a missile, trying to get out in the southern part of the Strait of Hormuz, close to the Omani coastline. There was another vessel, a bulker, I believe, that was attacked by small skiffs much closer to the Iranian coastline, actually in the same area where the 2 MSC container vessels were attacked and seized a couple of weeks ago. And the incident happened that there was a broadcast over VHF radio to a lot of vessels laying at anchorage outside Ras Al Khaimah, also in the UAE, telling vessels to pull anchor and move further away from the Strait of Hormuz. Allegedly, this is probably also from the Iranians. So clearly the Iranians are amping up their efforts now in effectively attacking vessels, saying you should not go through, despite what the US is saying. We then had information from the Iranians claiming to have hit a US naval vessel with missiles. We also have information from US Central Command denying such an event has actually taken place. What is correct and incorrect, we factually simply don't know. The last piece of information we have from today is again the US military announcing they have now safely escorted 2 US flag vessels out of the Persian Gulf. These are AIS off, so again we cannot independently verify whether this is the case or not, or which vessels we are talking about. I went through and checked all US flag vessels, how many could there be in the Persian Gulf, and if you look at it, there will be 5 US flag vessels in the Persian Gulf. These are 5, that is aside from any naval vessels, of course. These are 5 vessels that were all located with AIS on in the Persian Gulf prior to the war, and as the war broke out, they all switched off their AIS. It's 1 car carrier, it's 2 tankers, it's 2 container vessels. One of the tankers, Stena Imperative, was actually one of the very early casualties and actually did get hit by a missile or drone from Iran early on in the war. So we know for a fact that there are these 5 US flag vessels in the Gulf, but which 2 have been escorted out, if they indeed have, we don't know at this point.
Yeah, great news for the seafarers, though, that are on board the vessel. It's been a tough time for them.
It has been, but I'm not quite sure how much of a great news it was for the ones that then were on the tanker trying to make it out and got hit this morning. The problem for the seafarers is, even if you got a military escort, that's not a guarantee you will not be attacked. It's also not a guarantee you will not be hit. If you have that military escort, it likely reduces the likelihood that you get hit if you are attacked. On the other hand, given the situation as it is right now, if you are in that escort, there's probably a higher likelihood that you will actually be attacked.
Right. Okay. Good thing to keep in mind. Well, let's talk a little bit about the overland operations. We've mentioned that a few times in recent episodes, but I think it's worth a closer look at. Could you talk about that a little bit?
Yeah, sometimes it's good to make a little bit tangible, and I was talking with the port of Khor Fakkan the other day, and that actually provided some interesting perspective of what is happening for the overland option. For those unfamiliar with Khor Fakkan, it is a container port located in the United Arab Emirates, but facing the Gulf of Oman. So you can get to it without crossing the Strait of Hormuz. Prior to this war, it was principally being used for transshipment operations and not one of the major nodes for doing so compared to some of the other large nodes, say, in the wider region. But as the Strait of Hormuz closed, suddenly it became an option to sail your container vessels into Khor Fakkan, then move them by truck overland from there. And to give a sense of the scale of operations, prior to the war, it was about 100 trucks a day coming from Khor Fakkan. Right now, it's about 6,000 trucks per day. That is a massive ramp up in operations. In order to accommodate this, the port within a matter of weeks expanded from 2 to 10 working gates. And they also set aside a huge staging area outside the port, where, as far as I know, it's about 1,800 trucks that are lined up in that area. So a huge ramp up, and also shows how quickly some of these supply chains can adapt to new circumstances. Final piece also of the puzzle here is this is not just for cargo going to, say, Dubai. It is also for cargo further up the Persian Gulf, because some of this cargo is simply being trucked from Khor Fakkan to other container terminals on the Persian Gulf side, where it can then again be loaded onto vessels, and the cargo can continue onwards to Qatar, to Bahrain, to Kuwait, to Iraq. So creating a semi-land bridge and then back onto the sea again, which also goes to show that of the vessels in the Persian Gulf, not all vessels are sitting idle and are just trapped. Some of them are actually moving cargo flows within the Gulf itself. But overall, I think the Khor Fakkan here is a good illustration for also some of the other ports down there in terms of how quickly operations have ramped up to deal with the situation.
Yeah, it's an excellent example of the resiliency that supply chains have built into them. I was reading some data that Kepler published. The Khor Fakkan port generally handles about 11,000 TEU per week, but we've seen in the past couple weeks an average of 78,000 TEU. So it's really stretching it as much as it can in order to accommodate this. Let's talk a little bit about the fuel changes, low sulfur fuel rule.
Yes, this is one of these things. The world still goes on, and topics that would likely be much more prominent if we hadn't had all these disruptions and wars. One of them is the meeting in the MEPC, so that's the environmental group under the IMO last week. One of the things that was decided was actually to expand the low sulfur fuel area into the Northeast Atlantic. And when I say low sulfur, it's not what we have been used to since 2020. There are some ECA zones where the requirement is for even lower sulfur. We've had it in North Europe for many years, and that basically means you can only use fuel with less than 0.1% sulfur. The low sulfur fuel we are used to globally has 0.5. So this is ultra low sulfur fuel now coming to Northeast Atlantic waters coming from 2028. What this will mean is operationally not all that much, but it will mean that vessels that are plying, especially the Atlantic trade, will have to use more expensive fuel for part of their voyage. And as always, that more expensive fuel at the end of the day will filter down in the form of higher freight rates and higher bunker surcharges to the shippers. This would be akin to what they already have in other places of Europe with vessels going in and out.
And for our listeners who aren't familiar with ECA, what exactly does that stand for?
It's basically an environmentally controlled area where you want to limit the usage of sulfur as much as possible. The overall reason is the same why we also have the global low sulfur fuel rules. Sulfur that is emitted into the air eventually finds its way into the lungs of people, which over time tends to cause more lung disease, and you actually have at least theoretical calculations of how many people potentially die from getting too much sulfur into their lungs.
Yes, I think their estimates were 4,000 premature deaths will be prevented because of this new legislation.
And just for the sake of clarity, it should be clear that this low sulfur rule, it has nothing to do with decarbonization. This is sulfur. It's a completely different discussion than the whole environmental element around carbon emissions.
So it might be good to actually talk about that. So there was an update with the MEPC meeting talking about net zero framework. So what's happening there?
What's happening is that the net zero framework is at least still alive, potentially on life support, but it is still alive. Coming into this meeting, keep in mind half a year ago, the anticipation was that it would actually have been confirmed, but instead the can was kicked down the road for a full year. And the meeting here was more a matter of trying to find a way forward. The US delegation showed up with the FMC chairman basically wanting the net zero framework completely killed off. That's it. They were unsuccessful in coming up with that. The agreement so far is there will be a couple of technical work group meetings to line it up for the next MEPC meeting in November to see if common ground can be found in some way, shape or form to still have the net zero framework. That's why I say it's not dead, it's on life support. I wouldn't be cautiously optimistic. I'm not sure I would be all that optimistic, but there is at least still a likelihood that some elements of the net zero framework would indeed be able to pass come November. But that's basically where we are on the NZF.
Yeah. And so I think it's good to talk about why this is important, why it matters in the grand scheme of things. There is a goal to be net zero by 2050. Is that correct?
Yes. Back in 2023 in the IMO, it was agreed that global shipping should become carbon neutral or zero carbon by 2050. And accompanying that, there were some temporary targets to also be hit in 2040 and in 2030. Now, mind you, this was back in 2023 when 2030 was 7 years away. It was also said in 2023, targets without any regulations are unlikely to be met. So regulation needs to be implemented. And that was the net zero framework. So in 23, the basic idea was in 25, the net zero framework should then be adopted in time for then actually having an impact on the targets in 2030. Now we're at a point where, at best, we'll have a net zero framework by the end of 26, which realistically means an earliest implementation date sometime in 28, maybe even early 29. So any material impact on 2030 is highly questionable. And of course, then also casts into doubt whether it's even realistic to maintain the 2050 decarbonization targets.
Yeah, so it's definitely an important milestone. All right, well, we'll keep reporting on this as there's more news. Let's talk about this blocking statute that's coming out of China. Can you explain what that is to our listeners?
Yes. Let me first confuse the listeners and then try to bring some clarity. Because offhand, sanctions sounds easy. If a country you are working in sanctions another country, don't do business with that country. That is exceedingly simple. What could possibly go wrong here? China has now introduced blocking statutes, not completely everywhere, but the core part here, US placed sanctions on 5 Chinese refineries. But China then put sanctions in place towards anybody who actually enforces the US sanctions if you are in China. If that sounds confusing, it's not the only confusing part. This has been the de facto situation for years now between also US and EU, where basically if you are an EU company, it is illegal for the EU company to enforce a US sanction if the EU doesn't have the same sanction. Now it sounds even more confusing. So let's try to make this incredibly simple. Let's say, for sake of argument, I'm sitting here in Denmark. So I'm a Danish company. And I am doing business with, let's just hypothetically say, an Indian company. That is perfectly fine and dandy. That is absolutely no problem. I make a 2-year contract with my Indian counterpart out there, and all is good. Then assume tomorrow the US decides that this company in India is aiding Iran. So the US now places sanctions on that company in India. Now I'm sitting here in Denmark. Now I have a problem. Because I can continue to work with my Indian partner according to the contract I have with him. But then I will also be doing business with a company that's on the US OFAC sanction list, which very well could bring me in trouble with the US now for also violating US sanction rules. So if I also have business in the US, I have a significant problem. My immediate go-to would be, that's fine, I'm going to terminate the contract with my Indian partner. And here's where the problem arises, and this has actually arisen. The Indian partner will now sue me for wrongful termination of contract. Because me terminating the contract because of US sanctions is me violating the EU rules, because now I am enforcing a US sanction that the EU doesn't have. So I can now choose, do I want to be in violation of the US sanctions or do I want to be in violation of the EU sanctions? But I need to choose one of those two. From a situation that didn't exist. I started out trading with a partner in a third country that was not sanctioned at all. So this is the problem. And this is as simple as we can make it. This was when it was only a matter of US and EU. Now China is joining the fray with their own blocking statutes. I would not be surprised to see this not spread like wildfire, but spread as a tool amongst more countries over the coming years as the world fragments. And this creates a whole new compliance issue for a lot of companies.
Yeah, I mean, how do you even have a compliance strategy? It's like a lose-lose situation. You really can't win here.
It is, unless you start to go down the path of thinking, instead of just having, I was about to say, the use of force majeure clauses, to start to develop standard clauses, taking these situations into account as well.
Yeah. Well, I'm glad I'm not doing that as my full-time job, and I apologize to those that have to deal with that, because it sounds like a big headache. But Lars, is there anything else you want to add today?
No, I think that was enough of a deluge of news for our listeners and listeners and viewers here today.
You might want to talk a little bit about your Africa trip. I know you've been posting about it on LinkedIn. Want to confirm to our listeners that we will be still doing this podcast weekly, but talk a little bit about that.
Yes, I'm going to spend 18 months starting here on July 1st, driving my almost 40-year-old van here from Copenhagen all the way down to South Africa and back up along the east coast, ending up in Kenya. Purpose is to get a closer look at logistics, container shipping opportunities on the fastest growing continent on the planet over the next couple of decades. So I'll be basically permanently on the road. Now, of course, for all our listeners and viewers here, that is nothing new. As you have seen many times, I'm on all sorts of odd locations. Now I'll just be traveling not by plane, but by land instead. So we will definitely still be on.
It sounds like the adventure of a lifetime.
Definitely does. And allow me to also just say I'm very grateful, especially to my two key sponsors, Hapag-Lloyd and DSV, for joining me on that trip.
It's wonderful. Well, we will try our best to stick with our episode recordings Monday morning, but please forgive us if we have to reschedule occasionally due to Wi-Fi issues and all that. But
on that count, I have just invested in a Starlink Mini, so I have great hopes and expectations for solid internet coverage for our podcast.
That sounds wonderful. One last note for our listeners. So we are going to be publishing a survey. We want to be able to hear from you what you like about the podcast. Has it changed anything in your day today? It'll be a really quick Google form survey. So we'll put that on the NYSHEX LinkedIn. If you all have 5 minutes, we'd love to hear from you. And I think that is everything for today. So thank you for tuning in. If you haven't subscribed already, we're on Apple Music, Spotify, and YouTube. And we'll see you next week. Have a good one, y'all.
Thanks for listening to the Supply Chain Secrets Podcast, presented by NYSHEX. Be sure to subscribe on your favorite podcast app.